Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points.
In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area and is currently in the process of rejecting it to the upside. In fact, from here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected. Again, here. At the moment, the market is testing its zone again, is currently in the process of rejecting it to the upside. And in a situation like this, more bullish price action could be expected away from this zone. So the monthly time frame at the moment definitely seems quite bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can notice that in creating this move to the downside, the market has also started creating this M pattern. And in general, after the creation of an M pattern, what you would naturally expect is for the market to create a rejection to the upside, to go and complete the M pattern at the neckline. So the previous support turned resistance here from a weekly standpoint. So from a weekly perspective, there is the possibility of seeing a bit more bearish price action and then a potential rejection to the upside, completing this M pattern at the neckline. Dropping down on the daily time frame, what do we see? Now, on the daily, we see a very similar situation. We can notice that in the creation of this push to the downside, the market has become overextended to the downside. Generally speaking, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And this shows us how we have a 0.382 retracement currently lining up at this level, which is quite far above the current market price, indicating that this market definitely seems overextended to the downside and in need of a deeper correction. We can also notice that the level that the market is currently testing is exactly the previous low, from which there is the possibility of the creation of a double bottom at this level. Keeping all of this in mind and moving to the commitment of traders to see what the non-commercials, so the biggest players in the market, are doing precisely on the NZD. And what we can notice here is that the net positions with the last reports have been massively increased. We went from having a negative net positioning of minus 16.7k net positions, showing how institutions had more shorts than longs on the NZD. In fact, we went from having 36.5k shorts compared to only 19.8k longs, all the way up to now having the complete opposite situation with a positive net positioning and more longs than shorts, 26.2k longs compared to only 25k shorts. And keep in mind that all currencies on the spot are traded against the USD. So if you're looking at the data for the NZD, you're actually already looking at NZDUSD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, we can keep in mind that all this area is very strong historical support. We have seen that the market is overextended to the downside. We do have the overextended M pattern on the weekly, and again, this area is a historical support from the monthly time frame. So there is the possibility of a potential reversal higher for the market to stop being overextended to the downside. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to understanding and predicting potential intraday shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, only at that point, if the market creates a rejection to the upside, I definitely wouldn't be surprised. And that would also complete the overextended M pattern here from a daily perspective. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the CO2 data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.